Assalamu alaikum friends, welcome to part 3 of IFRS 16 lease accounting where I'll be finishing the questions. So, Coffee Bean enters into a contract with an import operator to use some space. He enters into a contract to use some space in the airport to sell his goods from portable kiosks for a 3-year period. Coffee Bean owns the portable kiosk. The contract stipulates, so who owns? The Coffee Bean owns. Use of space. Okay, the contract stipulates the amount of space and states that the space may be located at any one of the several departure areas within the airport. The airport operator can change the location. They can change the location of the space allocated to Coffee Bean any time during the period of the use, and the cost that the airport operator would incur to do this would be minimal. There are many areas in the airport that are suitable for the. There are many areas that are suitable for this one. Does the contract contain a lease? Straight away they said the contract does not contain a lease because there is no identified asset. When there is no identified asset, you cannot say it's a lease. To say it's a lease, there should be identified asset, right? Now let us read more. The contract is for space in the airport. You see, it is just for getting the space in the airport, the contract. And the airport operator has the practical right to substitute this during this period of use. So air operator they can change it. They have the right to substitute during the period of use because there are many. Why they can do it? Because there are many areas available in the airport that would meet the contract terms. So even if the airport operator does not give that area to the Coffee Bean, there are so many other areas which can be used for the contract, right? Providing the operator with the practical ability to substitute. So they can substitute, right? The airport operator, they can substitute easily. The airport operator would benefit economically from substituting the space. Who will benefit? The airporter. They would benefit from substituting the space because there would be minimal cost. The cost is minimal of doing it associated with it. This would allow the operator to make the most effective use of his available space, thus maximizing profit. So they can make the most effective use of the space and they can maximize profit. Therefore, this is not a lease. So the main thing is there is no identified asset. They were talking all about space, that they want to take a space. That's it. There's a contract to use a space. That cannot be a lease. I'm sure most of you might be thinking that it's a lease, right? Because the contract term has been given and it's a contract, but it is about space. That's why you have to be very, very careful when it comes to IFRS 16. IFRS 16 could be a very challenging area also. To discover lease in a contract is a hard thing. Once you have discovered it's a lease, then the rest all is easy. The next one says AFG enters into a contract with Splash the supplier. Here also they enter into a contract with the supplier to use a specified ship for a 5-year period. You see, here this is an asset now. Specified ship for 5-year period. Splash had no substitution right during the contract period. He cannot change it. AFG decides what cargo will be who decides? AFG. They decide what cargo will be transported, when the ship will sail, and to which port it will sail. However, there are some restrictions. There are some restrictions which are specified in the contract. Those restrictions prevent this one from carrying the dangerous material as cargo or from selling the ship into the waters where piracy is a risk. Right. So Splash operates and maintains the ship. Who operates and maintains the ship? Splash. And is responsible, and he is the responsible for the safe passage of cargo on board the ship. AFG is prohibited from hiring another operator for the ship. He is prohibited that he cannot hire another operator for the ship and from operating the ship itself during the term of the contract. And from operating the ship itself during the term of the contract, he is prohibited from doing it. Does the contract contain a lease? Looks like it does, right? But we'll see. They has the right to, who has? AFG now has the right to use an identified asset. What is it? It was a specific ship. For how many years? 5 years. For a period of time. This was the definition of a lease. Right to use identified asset for a period of time. Period of time is 5 years. Right to use identified asset is a specific ship. Splash cannot substitute the specified ship for an alternative. This is an unknown area. So this is a lease. It's a lease. AFG has the right to control the use of the, who has the right? AFG has the right to control the use of the ship. That means they can say how they're going to use that ship throughout the 5-year period. Because of these two things. It has the right to obtain substantially all of the economic benefits. Who has the right to obtain the benefit? AFG. That means when they use the ship, they are the one who are going to get benefit from it, from the use of the ship over the 5-year period. Right? Due to its exclusive use of the ship throughout the period of use. They are going to use the ship throughout the period of use. That means for 5 years, they are going to get the benefit from using that ship. Next, it has the right to direct the use of the ship. They have the right to direct the use of the ship. Right? It was given there in the case study. Although contractual terms, even though some terms were there which limits where the ship can sail and what cargo can be transported, this has to define the scope of, it defines the scope of AFG's right to use the ship, rather than restricting their ability to direct the use of the ship. Their ability, they still have that ability to direct the use of ship, but that scope of using that ship is reduced. It's limited now. Okay. So within the scope of its right to use, even though the scope is reduced, even in that little scope, now they have the right of use. Okay, they can direct the use of the ship. AFG makes a relevant decision. So who makes the relevant decision? AFG, about how and for what purpose ship is used during this period of use, because it decides whether, where, and when the ship sails, as well as the cargo it will transport. So Splash's operation and maintenance of the ship does not prevent AFG from directing how and for what purpose the ship is used. Okay, even though they operate and maintain the ship, it cannot prevent AFG from directing how and for what purpose the ship should be used. Therefore, based on the above, the contract contains a lease. So this is a lease. Next. On 1st of January 2001, Dynamic entered into a two-year lease. So here you don't have to identify whether it's a lease or not. Here they have clearly told. You only have to identify whether it's a lease or not when they say the word contract. This one has entered into a contract with another party. Then you have to say whether that contract is a lease or not. But here they have clearly told it's a 2-year lease. So it's a lease. Here you don't have to find out whether it's a lease or not. They have already told that it's a 2-year lease for a lorry. Even the specified asset they have given, the lorry. Okay, and also the term of the lease is given 2 years. Now the contract contains an option to extend the lease. Okay, for a further year. That means another 1 year you can extend the lease. You have that option when you go for the lease in the beginning. So Dynamic believes that it is reasonably certain to exercise this option. That means they are going to extend. Lorry has a useful life of 10 years. Lorry, the asset has a useful life of 10 years, whereas the lease is only 2 years. Now, lease payment at 10,000 per year for the initial term and 15,000 per year for the option period. You see, for the option to extend that lease term, 15,000, and for lease payment as it is, initial term 10,000 per year. All payments are due at the end of the year. Okay, to obtain the lease, Dynamic incurs, okay, to get that lease, they have to incur some direct cost of 3,000. Lessor immediately reimburses 1,000 of this cost. Because there's a cost to the lessee, what does the lessor do? They give this 1,000 to the lessee. The interest rate with the lease is not within the lease is not readily determinable, so you cannot get the interest. Dynamics incremental rate of borrowing is 5%. You can use this 5% to discount. Calculate the initial carrying amount of the lease liability and the right of use asset and provide the double entries needed to record this amounts in Dynamics financial records. One of the easiest question. Wow. So the lease term is 3 years. Now the lease term is 3 years, okay, after extending 1 more year. This is because the option to extend the lease is reasonably certain to be exercised. It is reasonably certain to be exercised. That's why lease term will now be 3 years. So now you have to take for 3 years. 10,000, 10,000, 10,000. We are not taking the 15,000. That 15,000 is for the option to expand, that will go later. But it's 10,000, 10,000, 10,000. The initial one we have to discount by 5%. Okay. So after we discount, we get this present value. Next. The initial cost of the right of use. What is the initial cost of the right of use asset? 3 things are there. Initial liability value, which is 3152. You get it from here. Okay. because this is the lease liability. So that value you carry forward to calculate the right of use asset. Then with that you add the direct cost and you deduct any reimbursement. That means if you have paid, compensated or reimbursed any amount to the lessee, that amount needs to be deducted from the cost. So therefore 1000 we are deducting, and this is now the value of right of use asset. So the double entry will be debit and credit. Debit right of use asset. Okay, if you see right of use asset, it is not this amount. Okay, this is cost only. This is the amount of right of use asset. If you see right of use asset, you see debit and credit is the same amount, lease liability and right of use asset. Now, because for each item you are recording separately, okay, debit credit, debit credit, debit credit. So right of use asset is debited 3000. That means we are adding 3000 and cash here is credit 3000. Okay, and next cash is debit and right of use asset needs to be credit, because from right of use asset you are deducting 1000 and cash is debiting because the lessee is receiving that cash. Remember, lessor is reimbursing means lessee is recognizing. We always recognize right of use asset and lease liability from the lessee's point of view. So lessee is receiving cash if lessor is reimbursing that 1000. Okay, and here this 3000 is deducted because that is the direct cost from the lessee. So cash goes out. Okay, now let us go to the fourth one. This question follows on from the previous test your understanding. Okay, just wait a minute. Just want to go through the requirements. Okay. Explain the subsequent treatment of the lessee in the year. Okay, this is about subsequent treatment. Same question. Okay. So let us go here. Remember, you have to charge interest, and for that interest, it is charged on the lease liability, right? So let us go to the working one before we proceed any further. So working one, lease liability. Okay, lease liability you are taking for 2 years. Why is that? See, only for 2 years you need to take interest on that lease liability. When you extend that for 1 year, you are anyway going to pay that. So that on that you will not charge interest. That year itself, the end of the third year, you will give that payment, that 15,000, which one was for extending the lease term to 1 year. So that you will not take as a lease liability. Only the first 2 years will take as a lease liability. So this was the opening. This is the amount which we calculated. On that you charge 5%, the borrowing rate. Payment 10,000 will be deducted. This is closing. Again, this closing becomes the opening balance this year. Again, charge 5% and deduct 10,000, and this is the closing amount. Okay. Just okay. So the amount will be it is 31st December 2001. Then it will be this amount 1578. Yes. So you debit that in the P&L and credit the lease liability because lease liability goes up. Cash payment. Cash payment is 10,000. Your liability is reducing in that year and cash needs to be credited. Okay. The liability has a carrying amount of this at the reporting date. How? Of this is non-current and this one is a current liability. Again, working one. So let us go to working one. We see the carrying amount is what? What is the carrying amount? It is this 23,130. So out of this, what is current and what is non-current? Okay. So non-current is the balance between this. Just take the difference between 23,130 minus 14,287. The balance will be non-current. Okay. So this is non-current. This 8843. Okay. And 14,287 is, sorry, this is current and 14,287 is non-current. 14,287 is this one. This is non-current. Okay. Non-current for 2001 it is non-current because it will be paid in the next year. But in the current year, it is the difference between these two. 23,130 minus 14,287. That's why it reduced from here to here because currently you have paid. So the difference is for the current and the 14,287 is non-current liabilities. Okay. Now, the right of use asset. So this has to be depreciated over. Now you have a choice, 10 years or 3 years. After extending, okay, you have to take not 2 years, 3 years or 10 years because the useful life of the asset was 10 years. Shorter of the two. Shorter of the two is what? The lease term, which is 3 years. So you need to divide this by 3 because it is shorter than the useful life. So you divide this by 3 years. 33,552. Okay. It's not here, but it's given definitely in your test your understanding 3. 33,552 is the carrying amount of your asset. If you see here, you see this amount. This amount needs to be divided by 3. The right of use asset. The depreciation you debit in the P&L and credit the right of use asset because it will reduce. So you finally reduce the depreciation from the right of use asset. This will be your carrying amount at the reporting date. Okay. So that's it. We are over with it. Now let us go to the fifth one. 1st of January 2001, Kingfisher enters into a 4-year lease of property. This is a property with annual lease payment of 1 million payable at the beginning of each year. So this is payable at the beginning of each year. According to the contract, lease payments will increase every year on the basis of the increase in the consumer price index for the preceding 12 months. Okay. So this lease payment will increase. Because we told in the lease payments, this is also there. It is 125. The CP index at the commencement date. The interest rate implicit in the lease is not readily determinable. The borrowing rate is 5% per year. Okay. At the beginning of the second year, this is 140. Beginning of the second year, the CPI. Discuss how lease will be accounted during the first year of the contract on the first day of the second year of the contract. Two things. So first year. The first payment occurs on the commencement day, so it is included in the initial. So because the first payment occurs on the commencement date itself, you're not paying after 1 year. That was normally, right? We pay after a year, but here on the commencement date, you are paying the first payment. So that is included in the initial cost of the right of use asset. What is it? 1 million debit right of use asset, credit 1 million cash. Okay, now let us go to the liability part. Liability should be measured at the present value of the lease payments not yet made. The payments are variable, you see, as they depend on an index. They should be valued using the index at the commencement date. It is assumed that the index will remain at 125 and so the payment will remain at 1 million a year. Let us again go to the question to understand the CPI. Okay, so for the first year, it is 125 only for the 12 months. Okay, the CPI. Okay, the first year of the contract it is 125. So the CPI will remain at 125 and payments will remain at 1 million a year. So I'm not quite understanding that line, but because this is let me read it again. At the beginning of the each year, according to the content, lease payments will increase every year on the basis of increase in CPI. So if your CPI increases, your payment will increase every year. But since for the 12 months, that means first year CPI remains same for all the 12 months. So your payment will be 1 million. Okay, it will remain 1 million a year. So now 1 million, 1 million, 1 million for the 3 years you discount using 5% and this is your present value. Okay, so you debit this right of use asset and this you credit as a lease liability. Next, since we have recognized a right of use asset depreciate over the lease term of 4 years. Okay, so this is the charge 0.93. Remember, it is 1 million plus 2.72 because right of use asset is 2 million, but the payment is 1 million. Divide this by 4. Okay, because 1 million is the initial cost, first payment you made. So with that right of use asset you add 2.72. That's why 1 plus 2.72 divided by 4. So depreciation you debit, right of use asset you credit. And finally what do you do? How to calculate that carrying amount of the asset? At the reporting date, 1 million plus the right of use asset minus the depreciation. This one is the carrying amount. Now let us go to the interest charge on the liability 0.14. Same way. Let us go to the lease liability table. Okay, so the first year is only 1 year. This is the opening on that 5% on the closing. So this 0.12 is the finance cost which will be debited in the P&L and credited in the lease liability. So this will be the carrying amount. Okay. Now let us go to the second year. The first day of the second year. Why they told first day? Because the payment are made in the first day of the year. That's why. So there are 3 remaining payments to be made. to be made. Okay, just give me a time. This is for 4 year. Okay, that's why the first year wins, so that means 3 more years are remaining, right? So there are 3 remaining payments to make. The payment for the second year is that second year that is now due is this much. How did you get it? Remember, first year it was 1 million. It remained fixed because CPI remains fixed for all the 12 months. It didn't change. But here CPI increased to 140 in the second year. So that's why it will be. This is how you calculate when the CPI increases. 140 divided by 125 into 1 million. 140 because it's new year, or 125 was the previous year, into 1 million because 1 million was the initial payment. The first year payment was 1 million. So this year it will be 1.2 million. Okay. So now that lease liability is remeasured to reflect the revised lease payment, 3 payments of 1.12 million. So after that, they didn't give what is the CPI. So we are assuming it will be 1.12, 1.12, 1.12 for all the 3 years, and we discount by 5% only. And then this is the present value 3.21. So lease liability must be increased by 0.35, because if you see the lease liability before, it was 2.86. You see, this was the closing balance. So 2.86, now it has increased to 3.21. So the difference is 0.3. Sorry, 0.35. So you credit and you debit. That means your right of use asset also. Corresponding adjustment has to be made to the right of use asset also. That also will increase. Okay. Because when you calculate right of use asset, what do you take? The lease liability only. Lease liability plus other cost. So lease liability increase means right of use asset will increase. So debit right of use asset by that the same amount. Now, because there are no other direct cost and also just the same payment of 1.2 million will then reduce the lease liability. So cash you credit and will debit the lease liability of 1.12. Now, right of use asset has to be depreciated. Remember, the carrying amount will be this much. Why? Because before it was 2.79, the closing value of the right of use asset from the previous year is 2.79. Now this year you have increased by 0.35. This will be depreciated over the remaining 3 years now, because from 4 years 1 year went, so 3 years. Okay. Now let us go to 6. Danbob is a lessor and drawing up a lease agreement for a building. The building has a remaining useful life of 50 years. The lease term, which commences on 1st of Jan, is for 30 years. Danbob will receive 40% of the asset's value upfront from the lessee. At the end of each of the 30 years, Danbob will receive 6% of the asset's fair value at this date. Legal title at the end of the lease remains with whom? Danbob. But the lessee can continue to lease the asset indefinitely at a rental that is substantially below its market value. If the lessee cancels the lease, it must make a payment. If the lessee cancels, it must make a payment to Danbob to recover its remaining investment. As per IFRS 16, should the lease be classified as operating or finance? Right. This is the reason why they are giving so much of information regarding who has the ownership, who is having the risk, what is the year of the lease versus the remaining useful life of the building and all, for you to identify whether it's operating or finance lease. So definitely for the knowledge part, you can refer the second part, where I discussed the ledger accounting, where I also discussed how to classify a finance or an operating lease. Okay, so this is just a repetition of it. A finance lease is defined by IFRS 16 as a lease which is that means substantially all risk and rewards of ownership is transferred to the lessee. Lessee is the one who will have the risk and rewards of ownership of the asset. That is known as finance lease. So key indications. There are some key indications in some list is given to say that the lease is a finance lease. This is the list. I don't want to repeat the same thing, but the reason I have to see is because I want to show you two things. One, how to link this to the case study if you get such a question. Second, most of the people, they don't see lecture, they don't go to the textbook, they immediately study from reversion kit. So for these two purposes, I'm again going through this. The lease transfers ownership of the asset to the lessee by the end of the lease term. End of the lease term, he transfers the ownership of the asset to the lessee. Number one, shows that it's a finance lease. Number two, Lease term is for the major part of the asset's economic life. Asset's economic life was 50 years. Out of that, 30 years is the lease term. You see, majority of it should be the lease term. More than 50%. So more than 50%. Major part we always assume more than 50%. So it's more than 50%. 60% is for the lease term. Again, it's a finance lease. Third, when you started the lease, present value of the lease payment at least substantial all of the value of the leased asset. For that, we need to go again to the case study. There are so many other points. There were, I think, around 6, 7 points, but they're only giving 5 points here because they want to link this to the case study. You understanding? So always you have to give points which is you can link with the case. If you cannot, then don't write that point. What is this? If you see, they receive 40% of the assets value upfront from the lessee. And at the end of 30 years, they will receive 6% of the assets fair value as at 1st of January 2000. Okay. So it shows that at least they are receiving substantially all of the fair value, not the full amount of the fair value they are receiving, but substantially all of the fair value of that lease asset, the amount they are receiving it, right? It is included in the present value of the lease payment at the start of the lease. So again, it's a finance lease. If the lease can cancel, if the lessee can cancel the lease, who loses? The lessor loses. The lessor losses are borne by the lessee. So again, it's a finance lease. Lessee can continue the lease for a secondary period. He can continue the lease for the secondary period in exchange for substantially lower than the market rent payment. Secondary period means I have made a mistake, people. In my part, I think in my part 2. Yeah, in my part 2. I told that secondary period means when you extend the lease term. No, secondary period means not that. Secondary period means when a lessee uses an asset, right, takes a asset on a lease from the lessor, and that lessee again leases it to someone else. You see, so now there are two lessor and two lessee. The first one, the first person, okay, let me explain this like this. A, B, C. A is the lessor, B is the lessee. So A is leasing, they have a lease term. Now B is leasing to C. So B now becomes a lessor for C and C is a lessee. So this term between B and C, whatever the lease term is, it is known as secondary period. Okay, I made a mistake in my part 2 where I told secondary period means when you extend the lease term. No, it is when you, so this term, okay, lessor leasing to lessee, again that lessee is leasing it to someone else. This is known as subleasing. Okay. So the lessee can continue for the secondary period also in exchange for substantial but they are receiving, okay, in exchange for substantially lower, the amount is so lower compared to the market rent payment, then it's a finance lease. Okay, because it is there in the case study. If you see here, right, they have mentioned here, you see, let me highlight it. The lessee can continue to lease the asset rent that is substantially below its market value. So this is the point they are making it. And also they cancel this one, they have to make the payment to the Danbob. That means lessee is the one who is having the risk. Okay, so all these points are from the case study only, they are linking. Next, if you see, the lease term is only for 60% because 30 over 50 of the asset's useful life. So legal title also does not pass to the end of the at the end of the lease. This factor suggests that this is an operating lease. Okay, so see, this 5 factors suggest that it's a finance lease. Okay, but when you come to here, you see the lease term is only for 60% of the asset's useful life. Legal title does not pass at the end of the lease. This factor suggests that this is an operating lease. Okay, guys. So this they are not linking to the case study. They are giving as it is. They are using the IFRS 16, whatever the finance lease. This. That means it should be one of this to be a finance less. Okay, I'm sorry, I've told that this one because this paragraph tells it. I haven't gone through this question, right? It's a long time I've gone through these questions. I usually don't go through the questions before I do. That's the reason I make this mistakes. But never mind. Good thing is that from my mistakes you people can learn. That's what matters to me. My mistake is not so big because I've already given the test. It's okay if I make mistakes, but you learn from these mistakes. Okay, the lease term is only for 60%. So I told before that 50%, more than 50%, they take it as a majority, but here they are not doing so. 60%. So up there says useful life. So because they have not defined what is the majority thing, okay, they just told only for 60%. Legal title also does not pass at the end of the legal title remains with the lessor. It does not pass to the lessee. This factor suggests that this lease is an operating lease. So this two factor suggest that this is an operating lease. Out of this, what is the factor? From here, from the list, they took this one. The second one, that's 60%, and the next one is the legal title. This one. So first 2 points they have used and told it's an operating lease. Okay, because if the legal title does not pass and majority of this one is not for the lease term, then it is an operating lease. However, the lessee can continue to lease the asset at the end of the lease term. But there are some factors that also suggest that it's a finance lease. He can continue to lease the asset at the end of the lease term for a value that is substantially below market value. These things are there. So some are saying is operating, some are saying is finance, according to some factor. This suggests that lessee will benefit. So this suggests that lessee will benefit from the building over its useful life and is therefore an indication of finance lease. So now it's a problem because some factors say it's a finance lease, some say it's an operating lease. Okay. Now how do you decide? The lessee is also unable to cancel the lease without paying. So the lessee cannot cancel the lease without paying Danbob. This is an indication Danbob is guaranteed to recoup his investment and therefore that they have relinquished the risk of ownership. It also seems that the present value of the minimum lease payments will substantially off the asset's fair value. Likely, okay, that the present value of the minimum lease payment will be substantially all of the asset's fair value. So now they are linking these points to the case study, these points, okay? All these points now they are linking below to say is a finance lease or not. All this paragraph, okay? Yeah, they're talking about those points. It also seems that the present value, okay, the minimum lease payment ignoring discounting equals to 40%. This is from the case study. They are telling that the minimum lease payment is 40% of the fair value upfront. That also on the day when the lease is commencing, and then another 180% of the fair value over the lease term. How 180%? 6% for 30 years, so 180% of the fair value over the lease term. Therefore, this again suggests that the lease is a finance lease. All things considered, it would appear that the lease is a finance lease because there are more things, more points to support that is a finance lease compared to operating lease. So, whenever you are in a confusion whether it is operating or finance, when it looks like that it's both, see under which one you have more points to justify. If you're having 1 point to say it's an operating lease versus 4 points to say it's a financing lease, you have to conclude that it's a financing lease. Looking, right, all things considered, that this is a finance lease. Very rarely, okay, they will not give you 50-50. So don't worry if 50-50 chances come. What if 2 points are for operating and 2 points for finance lease? They will not give you questions like this. They will not try to mislead you like that or make you confused. They will usually give some points towards one thing. Like in this case, more points are towards finance lease than operating lease. So it's finance lease. Now let us go there. Wage leases machinery to draw. The lease is for 4 years and annual cost 20,000 payable annually in arrears. The present value of the lease payment is this one. Anticipate rate is 15%. How they should account for their net investment in the lease. So remember, they recognize net investment as a receivable, right? So the present value is also given. This receivable will be increased by the finance income, and by cash receipt it will reduce. So you start with the opening. You have already been given this 5710. You start with it. You start applying 15%, and cash payment will be 2000 only for the 4 years. Okay, lease, because it is for 4 years, and annual cost is 2000. So 2000 every year you deduct. Then you get this closing balance. Then this closing becomes the uh, opening balance. Then this becomes the opening balance. Then this becomes the opening balance. So every year 2000 you deduct, and interest 15% you apply on the opening balance. Okay. And finally it should be zero, nil. If you have some differences, right, while calculating this 15%, you might have some decimals. So if you're not getting exactly zero, you might get something like 0.01 or 0.12. Don't worry, that difference is you are getting because of rounding this thing, rounding differences, because you might have round the number to whole number, you might have taken decimals. It's not possible to take decimals all the time, right? We always take rounded figure. So because of that rounding differences, you might get a small amount, but it is zero only. If you take the whole amount as it is with the decimals, you will get zero only. You should get zero. So it is recorded under non-current asset net investment in finance lease 3251. Okay, 3251. This one, the second year closing balance. You'll see the note below. And in the current asset it will be recorded 1315. That is this one. It's then the note. The current asset in the next installment less the next year's interest. So non-current asset is the remainder. What is the current asset? It is the next installment less the next year's interest. So next installment is 2000, right? From 2000 you minus this interest 685. So it will be 1315. That is the current asset, but the non-current asset is the remainder. Okay, remainder means the current asset is 1315. So 4566 minus this is 3251. Okay, 4566. You see, it is this amount. The this one. Okay, let me highlight it for you. It is this closing balance of the first year. From here you minus the current year's asset, which is 1315, to get the non-current asset. So now let us go to test understanding 8. OROC hires out industrial plant on long-term operating leases. Industrial plant long-term operating leases. On 1st of January 2001, it entered into a 7-year lease on a mobile crane. The terms of the lease is 175,000 payable on 1st of January 2001, following 6 rentals of 70,000 payable on 1st January 2002 to 2007. Crane will be returned to OROC. It will be returned to OROC on 31st December 2007. The crane originally cost 80,000 and 25,000 each for no residual value. So, okay. Discuss the accounting treatment of the work in the year ended 31st December 2001. Interesting question. Looks like there'll be so big question for 7 years, but if you see the answer is very, very small. So who holds? OROC will hold the crane in his statement of financial position because it will be returned to OROC. That means OROC is still owning the asset. Okay, this is an operating lease. You should understand. So OROC is the lessor. So he will hold the crane in the statement of financial position at the year end. Okay, and depreciate it over its useful life. Depreciate it over its useful life. This is an operating lease. The annual depreciation charge is, what is the annual depreciation charge? 880,000 divided by 25 years. The cost divided by 25 years. Don't think about right of use asset now. This is originally they are having the asset. Okay. Wait, the crane will be okay, see, the crane will be returned to Orac on 31st December 2007. So that means whether now or whether at the end, asset is Orac's asset only. So he has to recognize it in the statement of the financial position. Okay. And depreciate over its useful life. 880 divided by 25. So annual depreciation is this one. Now, they are going to receive rental income. This must be recognized in P&L on a straight line basis. So the total lease payment is what? What is the total lease receipt? 175 in the first year. For other 7 years, it is 70,000 into 6. Hence, the total is 595,000. Annual rental income is therefore 85,000. How 85,000? This total lease receipt, 595 unit divided by 7 years, the lease term. So this is the annual rental income. So the statement of the financial position includes a liability there for deferred income. Right? Because income you're not receiving now. After 7 years, you will receive. The total income you will have. It's being deferred today. So there's a liability. So you need to record that liability. How much? 175 minus 85. What is this 175? You see, see this 175, this you will receive in 2001 only, end of 2001, first payment. So that minus your what will be paid after, what will be paid in the 6 years annually. So the balance is only the liability, okay, which is 85,000, because 70,000 into 6, right? After that 595 you have divided it by 7 years. So this annual rental income 85,000 you deduct it. It has not yet been occurred, the income, it is deferred income. So the balance with this income you minus the deferred income, the balance is your liability. They should be recorded, this 90,000 should be recorded in the statement of the financial position as a liability. Okay. Now finally, let us go to the last question, test understanding 9, and this with this we officially complete our IFRS 16. So definitely this will be something a toughest one will be this one, because this is the last. That means it will be asked from all the areas. Definitely I can expect a sale and a lease back. 1st of Jan 2001, painting sells an item to machinery to college for its fair value of 3 million. Painting is the lessor, college is the lessee. He sells an item machinery to college for fair value of 3 million. The asset has a carrying amount 1.2 million before the sale. Sale represents the satisfaction of performance obligation required with the IFRS 15. That means the sale, it's a sale. The transfer is a sale. Painting, because when it says the sale represents satisfaction of performance obligation in accordance with IFRS 15 means it's a sale. And definitely this was discussed in part 2. Painting enters into a contract with college for the right to use asset for the next 5 years. Annual payment was 500,000 at the end of each year. The interest is 10%. Present value of annual lease payment is 1.9 million. Remaining useful life of the machine is much greater than the lease term. So that the reason why they have told is for you to show the lease term is shorter, so use lease term. Okay. Explain how the transaction will be accounted for on 1st of Jan 2001 by both painting and college. Okay. So painting is the lessee here. He is the seller. So he is the lessee. Painting. So what should he do? He must remove the carrying amount of the machine from his statement of financial position because he's selling, no? Who is selling? The painting is selling to college. So painting must remove that because it is not recognized as a sale. So you remove that carrying amount of machine from your financial statement, the paintings. They should recognize right of use asset because on lease you are taking. Sale and lease back. You sell it and then you take it as a lease. So now you will recognize right of use asset. And this will be measured how? Remember, when you sell and lease back, the way you measure the right of use asset compared to initially when you take a lease and measure the right of use asset are different. Okay, when it's sale and lease back, the right of use asset you measure it like this as the proportion of the previous carrying amount that relates to the right retained by painting. So you need to do this working. This fraction is required to calculate the right of use asset when it is sale and lease back only. These are the entry requires. Debit cash because you have sold it for cash 3 million. Painting is receiving this cash. Okay. Right of use asset is 0.76 from this fraction. We'll go to that later. And let us go to the machine. Okay. What is the value of the machine? It's 1.2. It is 1.2. Yes. So it's 1.2 you credit and lease liability. It's 1.9. Profit and loss is the balance figure 0.66. But there is a way of calculating this which will show. Okay. Lease liability is 1.9. This one. Okay. This is the lease liability. So now we need to work out on two things. One is the profit and loss. The other one is right of use asset 0.76. Okay. Remember this fraction. 1.9 divided by 3. Why 1.9? This is the lease payment. That means right of use asset also will be this 1.9. Okay. Divide by 3 million because you have sold it for 3 million. Out of this 1.9, this is the fair value. You sold it at its fair value only, equal to fair value. Sold it at its fair value means it is not less than fair value, it is not more than fair value. If it was the difference, then you know how to account for that also. Okay. If it is less than the fair value, it is a prepayment. If it is more than the fair value you sold it for, it is additional financing. We know that, right? But here it is equal to fair value. So you don't have to worry about anything. So that's why divided by 3. Okay, 1.9 is the right of use asset divided by 3 million. The machinery into 1.2. Why? Because this asset had a carrying amount before the sell. This was the carrying amount of the asset. You have to take it in proportion. That's why. This portion will be always whatever the carrying amount of the asset before you are selling. Okay. This 1.9 is the lease liability. And this 3 million is at the fair value of the asset. So this will be your right of use asset now. Okay. I hope that you label each things. Okay. So this is your now profit and loss you can balance. Okay. You add this 3 million with this. Okay. Sure. The credit side should be equal to 3.76. You see the debit side is 3.76. So credit side also should be 3.76. That's why this is a profit. 0.6. That's why it's credit. Now, another way, there's a way of checking and you should know this way. Because sometimes your balancing figure, you might get it wrong. The reason is because maybe maybe you have made errors in two places. For example, this amount you might have shown different amount. Then, one mistake you are doing on the debit side, same mistake, by the same amount you are doing on the debit side as well as on the credit side. So then your balancing figure, even though it is it's right that debit side should balance credit side, but the amount is wrong. That's why you should know the second method also of checking yourself whether that balancing figure is correct or not, right? The gain in profit or loss in the proportion is overall 1.8 million or gain disposal. The list was right as well as college. This can be as follows. Okay. You didn't understand anything. It's okay. You don't have to understand anything. That's my style. I read it. I read very fast. So it's just for my understanding. I've read it like that. Okay. Definitely, I'm not going to teach you like that. So don't worry. Uh, what here they have told is, okay. So how they have got that profit and loss? It is in proportion. Whenever in proportion means fraction is there. You have to involve a fraction. Okay, a fraction into something of the overall 1.8 million gain on disposal. How 1.8 million gain you are making on disposal? See, first you need to find the total gain. Based on that only you are finding the proportions. Okay, the overall gain is 1.8 million. How? 3 minus 1.2. That 3 is this one. You are selling at 3 million and the carrying amount of the asset before selling is 1.2. So 3 minus 1.2. You are selling at, you are making a profit of 1.8. Out of this 1.8, okay, what is the proportion? So when you want to calculate a gain or loss, definitely gain or loss can only be calculated for that proportion which you have sold, which you have transferred to college. So this relates to the right that you have transferred to college. Remember the right, not the asset that you have transferred to college. This is that fraction which you need to know. 3 minus 1.9 divided by 3. So 3 is the fair value of the asset. You have sold it at this, right? Minus 1.9. What is 1.9? It is your lease liability, your lease payment. So from the fair value of the asset 3, right? You are deducting your lease liability. That means you have to pay 3 minus 1.9. What is 3 minus 1.9? 1.1. You still have to pay 1.1. Divide by 3. Because you have sold it at 3. Right? That is the, you have sold it at the fair value 3 into 1.8. 1.8 is the total profit. So 0.666 is the profit you are getting. You need to do more questions like this. Then only you will understand this. To get it in your head. Right of use asset, lease liability will then be accounted for using normal lessee accounting rules only. Okay. Now coming to the college. Who is college? College is the lessor. College is the lessor. So he will debit the machine and credit the cash. Why credit the cash? Because he's buying from the lessee. So he has to pay in cash 3 million. So minus 3, credit cash, debit machine, because he's buying means he's getting the machine. So 3 million. So now normal lessor. Once everything is settled, then normal lessee and lessor accounting you can use. Okay. Normal lessor accounting rules will apply. That means normal means lease, you have to classify it as an operating or a finance lease. In this case, it is operating lease. Why? Because the present value of the lease payment is not substantially the same as the asset's fair value. What was the asset's fair value? If it's equal, then you can say it's an operating lease. The present value should be equal to the asset's fair value. Then you can say it's an op finance lease. But substantially it is not. What was the lease payment? It was 1.9. What is the asset's fair value? It was 3 million. You see? Fair value is more than the lease payment. So it's not an operating lease. And the lease term also is not of the majority of the asset's useful life. How are you saying this point, the second point? The last sentence says the remaining useful life of the machine is much greater than the lease term. That means lease term is very small compared to the useful life. So majority of the years are not lease term. That's why. Okay. So majority of the lease term is not, the lease term is not for the majority of the assets useful life. Only a small portion. So college will, now is an operating lease. How do you record operating lease? Rental income. College will record rental income. He's receiving income in profit or loss on a straight line basis. Okay. Normal, how lessor accounting will follow. Now don't think about lessor, lessee and all. Lessor accounting will follow the normal way. So he will recognize rental income at operating base for profit or loss on a straight line basis. Okay. In the, it's a rental income, right? Okay. So that's it for IFRS 16 practice questions. My job is done, right? See, my job will be over after I upload all the standards and all the revision kit questions, but I always keep repeating this because my lecturer used to tell me this, that we as a teacher, our job is only 30%, 30 to 40%. The remaining part is yours. The rest 70-60% is in your hand. What do you do with it? We can give you the best, you can have the best tutors, the most expensive institutions you can go to, but still you can fail, right? So it's not about having the best tutor, it's not about having the best institutions. You still can fail if you're not using it to your best of the capability, right? Because we're almost coming towards the end. A month is left, a month and some 5-6 days is left for your SBR exam and also all your ACCA exam. So I felt like that this is something very important that I need to tell. I often don't say things. Because I don't get time. I'm recording lectures. I'm recording revision kit. I don't get time to motivate my students, because most of the students, they mail me. They ask me that they want motivation. They want some advice, some guidance. I don't get so much of time to talk individually, one to one. But whenever I do get, I definitely try to do. But through my videos, I tell, because my videos reach to many people. So this is one of the best platform where I can tell you these things, that never give up hope. Some of you might are not prepared at all. This might be your last 1 month left for you. So do not lose hope, and do not ever think that you cannot overcome. Time is too less. Pressurizing yourself. In fact, most of my students are, when I ask them how they are, means I'm asking how is your health. See, your mental health matters a lot. I don't want to go deep into that. Then I will be talking all about human psychology and all. I don't want to go deep into that, but just briefly, that students are actually taking so much of pressure that they are overdoing things. In ACCA, you should know that you should not overdo something. When you overdo something, your performance declines. Seriously, your performance go down in the day of the exam. Even though you have performed very well, all questions attempted 100% completely, full revision kit twice you have done, all the past papers completed, still you go in the exam hall and you will suffer. You don't know how to answer. You're like blank. So don't over stress. Don't do too much. I would say don't overdo things. You need, see, your brain needs to function. It needs to be working healthy, right? You have to keep your brain. You have to look after all those things. I know study is a very important part, but study is just a part of life. It's not your only thing, the only thing as you used to think, right? So don't sacrifice. See, you have to sacrifice, because anyway you will not get anything without sacrificing. But that sacrifice should be something which should not affect your health, mental or emotional well-being. You can stay happy in a good condition mentally, physically, emotionally, and still perform well and pass the paper. If you want an example, you can see me as the biggest example, because I'm one of those students. I used to love studying anything, not just ACCA. You give me anything, I just love. I'm a curious type of people. I love to discover things, to know more things. I like to develop my knowledge and skills on different areas, not just one. I never stay to one thing. I study so many things, but I enjoy at the same time. I look after my health. I understand, I can read, I can understand when my body needs rest, when it needs sleep, and I definitely know when I overdo things. I know it. The next day I will not be able to get up. So that day I take a rest. I don't do it. I don't overdo it. There are days when you cannot stick to the timetable. Everyone says make timetable, you should stick to it 100%, but no one in the world stays 100% committed to the timetable. We are human beings with feelings. We are not machines. So please do not work like robots and machines. You know that you will eat from this time to this time, this time to this time. Having a routine is good, but it should not be too rigid. It should be flexible. Sometimes you might need longer sleep, so sleep. Sometimes you have to study more, so study more. Whenever your body is feeling good, you are feeling happy. Those are the moments where you need to study more, because whatever you study, it will just go to your mind. There are days like that. Trust me, I still go through that phase. Sometimes I don't feel like studying at all. I'm like, oh my god, अभी पढ़ने का मन नहीं है मेरा. So I'm like that in Hindi if I say. Sometimes I do feel like going out, so I have a visit. I talk to my friends. I go out. I do all normal things which any human beings will do, right? So don't overdo, guys, and don't underdo also. Don't be so relaxed also, and don't be too harsh on yourself. Calm down, really, release your stress behind. Forget about it. Don't even think about passing and failing. If your preparation is so strong, you should have belief and faith in your preparation that no matter whatever comes in the exam, you will do it. Because in the past you have done it, so definitely now also you can do it. Just you need to have that faith and go to the exam hall with the confidence. Okay? If you're thinking too much, if you're scared about passing and failing, trust me, you're not going to pass the paper. Because when I went to the exam, the first time for the SBR paper, SBR was my first paper. When I passed, in the second attempt I passed. I failed in the first attempt. Uh, Second time when I went, trust me, I don't know whether you will believe it or not. I'm not even kidding. But the second attempt I went, I was so, I don't know, something was there. Everything was working in my favor. I slept well the night before that. I didn't do anything. One day before it, I always take rest. 1 or 2 days before the exam, I don't write any answers because I know that on the day of the exam, I have to write. So I don't stress. I don't do anything which brings me down on negative energy and energies and all, right? So I always motivate myself. I self motivate. I don't take motivation from anyone, right? But rarely there are people. See, there are people who motivate me. So I'm thanking those people, my close ones. They really motivate me. But very rarely for motivation I go to someone. It rarely happens because it's the opposite. I'm the one who usually motivates my friends, also anyone, because I'm a very happy personality in personal life. If you don't know me, I'm a very happy personality. I like staying happy. I cannot stay sad for too long or depressed for too long. Even if I'm sad for something, within a day or two, I will bounce back and I'm like back to my working phase. I'm like that. So that's why you see in my speech also you see I will always be motivating and pushing you people. So that's the same thing I used to do with my friends also. I'm like that, right? So I think it's a good thing, no? Motivating people. We have less people like that who motivates people, and we have more of those people who draws us energy, who draws us down. So we don't want such people. But no, from time to time, apart from study, we need motivation from people, from your gurus, from the people who you believe, someone who has an influence in your life. You do need motivation. Trust me. It could be anyone. See, motivation can come from anyone. Sometimes it becomes very hard, especially at this phase. It's very hard to motivate yourself because you are alone. You're all alone. No one knows when you're studying. You don't go out. You don't meet your friends. You're all by yourself with your books. So it becomes very hard at times. You feel like giving up. You feel like, where did I just land? And especially if it's your first paper and you have a long way to go in ACCA. But definitely for those people who are giving the last paper, this is like an exciting moment. They just want to get it over and become an ACCA affiliate. So I really hope and I really pray for those people who are giving the last paper so that they soon become an affiliate, and also for everyone. My prayers are for everyone, that whoever is repeating or whoever is giving the first attempt, may Allah help all of you to pass with flying colors. Okay, so just I'm not a lecturer on YouTube. I want to be more than that, like a friend, like a counselor, like a anything, whatever you want to call me. It's up to you how you want, whatever name you want to put for me, you can do it. But ultimately, I am there for everyone, right? So when I was alone during my time, it was very hard. But I used to self motivate myself. It it has to come within yourself. So this is the time you need to motivate yourself and say that you can do it. You actually can do it. No one can stop you. The only person who can stop you from achieving your success is only you yourself. That's it. No one else. The moment you believe I can't, you cannot actually. The moment you utter these words, I cannot, trust me, it just brings down your energy to very low level. Your energy just goes off. You need to feed your mind with positive affirmations and all. You need to visualize that you have passed, and what are you going to do with all. So just don't sit and say I'm going to pass, I'm going to pass, and don't be overconfident. I have met such people also who are very overconfident, trust me. And when they come and say me, when I actually ask them how is the preparation, they're like, no need to worry, I have finished this, I have finished that. Overconfident. So there is a difference between being confident, which is good, but over and underconfident is not good. Neither you should be overconfident, neither you should be underconfident. Both can harm you. But definitely if you're underconfident, good thing is that if someone motivates you, you still can, you know that confidence goes up to some level. But if you're overconfident, you become arrogant. It's very hard for such people, for me to tell them that don't be overconfident, because it feels like that I'm being a bit rude. But when the result comes, they are the people who keep telling me that they should have listened to me, because there are so many mistakes which students do, right? Because it's very hard at your age, trust me, it's very hard to trust what are the best options, which paper should I go for, how many papers should I go for sitting. It's very hard to decide at that age. Because one thing I have seen that most of the people, I've never known this before, like globally, on the global level I'm talking, general points, okay, I'm not specifically hinting on anyone, so please don't take this as an offense, that they just want to finish ACCA in one go. They try to take 3 4 papers, and then they themselves already stresses themselves too much. So don't do too much. You should know your capability, how much you can take and how much you can do. No matter however hard working you are, don't say this to me, I'm hardworking ma'am, I will do it. It's not about you being hardworking and all. No one is saying that you are not hardworking, you cannot do it. But if you cannot do it, then don't do it. You should not do it, right? Rather, I would say do if you're doing professional papers. Rather, I would say do one paper per sitting and pass one paper completely and then go to the next. It's better because your mind is also clear off, rather than cluttering your mind with this subject, that paper. I have seen candidates giving 3 professional papers in one sitting. I'm like, oh my god. Maybe he must be very genius. Okay, I'm not saying bad. He must be very genius. I hope that he passes all the paper. But yeah, but the chances are very less. So you should not go for exception cases. There are exception cases where students pass 2 professional papers, 3 professional papers in one sitting. But we should always go by the majority, not by the exception cases. Okay? So majority 99%, they don't. Students don't. Either they will fail one paper, either they will fail both the paper. Then what? First of all, the cost is it's wasted. Money is wasted because you have failed both the subject. Second, money is not a factor, but the second thing is your motivation goes down. What about that? Because if you give one paper, that one paper you can divide it nicely in days and say, okay, I'm going to go by this subject. But if it's 2 paper, trust me, professional level papers are designed in such a way that you cannot, it will at least take, ideal time is 3 to 4 months if you want to pass with very good numbers. Some people take 6 months also. But 2 months covering 2 different papers, it's not a good option. I don't suggest. The reason I'm telling this now is because most of you might have booked for 2 papers. So maybe after hearing my this video, you might see, right, after hearing my speech, some of you might decide to give up on one paper. It might save you a lot of time, and your money and your motivation also will not go down if you fail both the paper. Failing one paper is it is still acceptable. You can still accept it and work on it harder and pass it in the second attempt. Chances are very high. Students usually pass in the second attempt if they go by one paper. But if it's 2 paper, then trust me, motivation goes. It's very bad. The motivation which goes down, it never comes up. It's very hard to bounce. So you need to bounce back. Failing and passing is all about life. As soon as you fail, don't cry. Just bounce back and make the timetable and stick to it and say that I'm going to work on it. Right? So that's it. I want to say, I don't want to extend this speech more long. Otherwise, half of you will be exiting my video and not, and most of you, I'm sure, I am pretty sure that most of you will not be even coming to watch till the end of this video. Most of you might have stopped long time back when I finished all the questions, because they are only worried about watching the questions. That's it. If it is so, then I would suggest, why are you watching my video, man? There are so many other videos, so many better quality videos, better tutors than me who are teaching this subject. You can go and watch them out, right? But I am like this. I will not change my style. Wherever I think I need to speak, I need to motivate people, I will do that, right? Because no one says, no one wants to accept, but we all humans, we crave for it. We want that motivation from people. Someone, it could be anyone. It could be your father, mother, it could be from your home also. I'm not saying that I am that someone who motivates, but for some people it could be me. I mean, you know. So yeah. So for today, I think that's enough. I don't want to continue it anymore. I think this much is enough for you to understand the overall scenario. So the bottom line is, take care of your health, my dear students, and look after look after everything. Okay, enjoy, go out, visit your friends once or twice, and before the exam, take good rest. 1 day before the exam, sleep well, take good rest, and be confident. Do not lose confidence. The You lose confidence and you lose it. That's it. So keep the confidence, not overconfidence, but confidence. Okay. So see you till next time. Okay.